Time has come, so we would now like to start the briefing for the consolidated financial results for the second quarter ended September 30th, 2017 for Hitachi Limited. First, let me introduce the presenters. Hitachi Limited, Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Tomomi Kato, Deputy General Manager, Financial Strategy Division. Yasuo Hirano, Executive General Manager and Corporate Brand and Communications Division. So the outline will be explained by Nishiyama.
Yes, if you could please take a look at the slide presentation material titled Outline of Consolidated Financial Results for the second quarter ended September 30th, 2017. Slide 1-2 is a summary of the profit and loss. In the middle, the 6 months between April to September, the second quarter cumulative revenue 4,376.4 billion, up 1% year-on-year. And portfolio reorganization, foreign currency fluctuation, they have had impact. So excluding them, it was up 4% in terms of revenue. Next, adjusted operating income, 303.2 billion. The margin is 6.9%. Increase by 70.4 billion year-on-year. EBIT, 296.4 billion. Increase by 77.9 billion year-on-year. At the bottom, net income attributable to shareholders, 160.6 billion. Increase by 47.1 billion. So net income 42% increase, operating income 30% increase. Moving on to slide 1-3, the waterfall chart of factors affecting changes in revenue and operating income. Macroeconomic analysis is given on the revenue side on the left. Impact of portfolio reorganization, Hitachi Transport, Hitachi Koki, these were deconsolidated. So negative impact of 262 billion, and foreign exchange fluctuation, positive 100 billion yen impact. Other than that, business scale expansion, 184.6 billion, a positive factor. Of this, M&As, Hitachi Construction, Hitachi Chemical, and Saluair acquisition. So with these large M&As combined, their contribution was 85 billion out of 184.6 billion. Other than that, pure organic growth, 99.6 billion. On the right-hand side, adjusted operating income waterfall, impact of reorganization, 27 billion yen of negative impact. Foreign exchange had a positive impact of 15 billion, and profitability improvement, the large arrow there, indicates 82.4 billion yen. M&A, out of this, 4.4 billion. Organic growth, 78.4 billion. Cost competitiveness improvement, and with structural reform of low profitability ability, through such initiatives, we are now able to securely generate cash flow. That's the kind of structure that's in place right now. Second quarter cumulative for the first half, operating income, EBIT, net profit, all of them for the first half performance were record highs. Moving on to the next slide, slide 1-4. This is the revenue by market here in Japan and overseas. If you could look at the first half, the breakdown, 48% comes from Japan, 52% from overseas or outside Japan. So outside Japan, overseas, last fiscal year was 49%. It's now 52%, an increase has seen. And year over year on the far right, Japan is 95%, outside Japan or overseas 106%. Although not stated here, impact of portfolio reorganization and forex fluctuation, excluding them, Japan 100, outside Japan 109%, so up 9% for overseas, and Europe is 92%. There's a reduction. That's because of Hitachi Koki's sale. So adjusting for that, instead of 92, it's 105% for Europe. Now, by region, larger growth was in China and the rest of Asia, 113% for China. Construction, machinery, automotive systems, Hitachi Chemical, these are the areas that grew. And ASEAN, India, and other Asia ex-China, Hitachi High-Tech, Hitachi Kokusai Electric, and Hitachi Construction Machinery. These businesses grew in ASEAN, India, and others. Hitachi Koki's sale impact was there. Hitachi Construction Machinery and Railway business, these two increased. And in other regions, construction machinery did grow quite substantially. The next slide, 1-5, is a summary of balance sheet and cash flow. The balance sheet summary at the top, total assets stood at 10,042.3 billion, so an increase of 378.4 billion year-on-year. The project's sales in the second half, the inventory thereof has increased, and that is one of the reasons behind. Now, CCC at the bottom, 72 days at the moment. Cash conversion cycle. For September, we planned it to be 77 days internally. Well, IP inventory is still increasing, but other divisions or units, the cycle improved, and so it was down to 72 days. Now, equity ratio 31.3%. It was an improvement by 0.6 points. DE ratio 0.29 times, so flat year-on-year. Now, cash flow from operating activities 278.4 billion, and cash flow from investing activities 234.4 billion. Included in this Saluaire acquisition, Hitachi Chemicals M&A. So outflow of fund is included in this. Free cash flow stood at 44 billion. It's a positive number that we have been able to secure. Moving on to slide 1-6. This is revenue and operating income by business segment. Just to give you the highlights, information and telecom systems at the top. ATM sales were down, but system integration business in Japan continued to be robust, and forex fluctuation worked positively, so up 1%. And operating income, IT platform and products continued with structural reform, and the impact of that was seen. And high-end flash storage sales increased, and system integration business in Japan saw improvement in profitability. So with that, operating income grew by 20.5 billion year-on-year. On top of that, EBIT has grown by 50.7 billion year-on-year. On top of the increase in adjusted operating income, business structural reform expenses decreased, and those were the factors behind. Next, social infrastructure and industrial systems. We withdrew from low profitable business in industry and distribution field, so revenue was down partly for that, but there was increase in railway systems, and with the acquisition of Saluaire, industrial products business grew. As a result of these factors, it was up 1% year-on-year. Adjusted operating income, because of industrial products business profitability improvement and power and energy business profitability improvement. And on top of that, elevator and escalator business in China struggled, but this was compensated for and covered by other positive factors, increase of 17.3 billion year-on-year.
Next, 1-7, electronic systems and equipment. This revenue is 96% year-on-year. But this is because of the deconsolidation of Hitachi Koki. Sales increase in semiconductor production equipment at Hitachi High Technologies and Hitachi Kokusai Electric was a positive factor. And therefore, the operating income, there was a negative deconsolidation of Hitachi Koki, but this was covered by sales increase in semiconductor production equipment. This positive factor was stronger, so the operating income grew by 9.1 billion yen. Next, construction machinery. Overseas sales centering on China increased. And in addition, we acquired Bradken and HE Parts, so 31% increase in revenues year on year. Operating income had increase in revenues and foreign exchange impact. So from these two positive factors, it was up by 31.6 billion yen. Next, slide 1-8, high functional materials and components. The electronics and automotive related products sales increased. And Hitachi Chemical acquired FIAM Energy Technology. So the revenue grew by 14% year on year. And with that, operating income grew by 5.5 billion yen. Next is automotive systems. Sales in China, Japan, and Europe increased. And revenue grew by 4% year on year. And with that, operating income grew by 3.7 billion yen. Next, slide 1-9, Smart Life and Eco-Friendly Systems. Revenue was 96% year on year, 4% down, but this was because of the change of the accounting to net-based revenue for part of our procured products such as TV in overseas market. Operating income had the effect of cost reduction and the effect of structural reform. Operating income grew by 4.8 billion yen. And others segment. This had the impact of the reorganization of Hitachi Transport System. So both revenue and operating income declined. Now, corporate items and eliminations, EBIT is minus 32.1 billion yen. Because Hitachi Transport Systems sales proceeds is not included this year. That's the reason of the drop. Overall, Hitachi Transport Systems transfer. So in others, there is no revenue and operating income, but in the other seven segments, we enjoyed increase in profit. Next, 1-10 topics for the first half. First is the progress of Lumada business. Revenues is shown at the top. In the second quarter, so for the first half, the revenues is 452 billion yen. This is for the plan of the progress was 44% against the annual plan, but now it is 48% progress against our forecast of 950 billion yen. So we are exceeding the forecasted progress. We are taking various measures to enhance the Lumada business. As you can see here, we launched Hitachi Vantara, which leads the global expansion of digital solutions business, and we expanded the collaborative creation with Daikin Industries and Toyota Motors using Lumada in the industrial sector. We are also strengthening our business toward growth. We completed the acquisition of the air compressor business, Solier business of Accudyne Industries on July 12th. And Hitachi Chemical acquired a thermal insulation manufacturer in Germany and lead storage battery company in Thailand. In addition, in business portfolio transformation, we commenced the tender offer for the common share of Hitachi Kokusai Electric on October, and we are also concluding an agreement to transfer its forged steel roll business and the facility management business. Next, in slide 2-1, I would like to explain the outlook for fiscal year 2017. First, At the top, you can see the projection, the foreign exchange assumption, 110 yen to the US dollar and 120 yen to the euro, and this has not changed from the previous forecast. Now, fiscal year 2017 revenues, 9,300 billion yen. This is up by 250 billion yen, and adjusted operating income, 660 billion yen, 30 billion yen up. EBIT, 580 billion yen. This is no change because up to the last forecast, we included Hitachi Kokusai Electric share transfer schedule in the third quarter of fiscal year 2017, but this is changed to fiscal year 18, and therefore our EBIT 580 billion and the EBIT 300 billion yen will remain unchanged. Now slide 2.2 onward. The electronic systems and equipment is a big change, 25 billion yen, and construction machinery 11 billion yen, and information telecommunication systems and high functional materials and components, smart life and eco-friendly systems are strong. Reflecting the strong strength, we have increased these three segments by 1 billion each in operating income. And in corporate items and eliminations, EBIT is down by 37 billion yen. This is because Hitachi Kokusai Electric share transfer schedule has been extended from fiscal year 17 to fiscal year 18. Because of the timing change, we have incorporated that factor. And as a result, the operating income is up by 30 billion, and EBIT and net income will remain unchanged. That's all. Thank you very much.
We would like to move on to questions and answers. Our staff will bring a microphone to you, so please make sure to state your name and affiliation before asking a question. Those of you with questions, please raise your hand. Thank you. Question. I have three questions I would like to ask. My first question is as follows. As always, the Q2 performance by business segment, whether operating income was good or not. Pages 30 and 31, we have been given some data. Well, just the segments with certain features compared to the internal plan, which ones were good, which ones were not, if you could give us an overview. Answer. Vis-a-vis our internal plan, in the first half on a cumulative basis, sales increased by 160 billion revenue, and operating income up by 40 billion compared to the internal plan. And the breakdown will be given by Kato-san. So you're asking for the first half, cumulative, for the 3 months of second Q2 as well, 90 billion yen increase. Answer. So 40 billion for Q2 cumulative for the first half, 20 billion in the second quarter only. 8 billion for electronic parts, construction machinery, 8 billion. So these are the major factors. And information and telecom, 3 billion. The remainder is 1 billion from smart life and eco-friendly systems. Question. Thank you. The second question is as follows. Corporate items and eliminations, I think it was plus 10 billion in the first half. Page 17, you have given us annual forecast with a comparison with last year. And corporate items and eliminations, 9 billion down this time. So minus 27 billion adjusted operating income. So second half, minus 37 0.2 billion. So I think the buffer you mentioned was 30 billion for the second half. So negative 37 billion. If there are any items that can justify or explain this, please answer. In terms of operating income, the factors behind expense increase is business investment. We would like to be active in making business investment in the second half. SIB incubation. That is something that we would like to be proactive on. And other than that, overall, the risk of adjusted operating income for corporate items and eliminations, 30 billion. So operating income 30 billion, and non-operating income and profit 30 billion. On an EB basis, 60 billion yen of risk is reflected in this forecast. Question, thank you. My third question is as follows. Well, this is related to the answer that you've just given. On page 15, you have given us profit and loss guidance. Well, Hitachi Kokusai Electric sale is to be deferred to next fiscal year. So operating income up 30 billion, but EBIT is going to be the same. Well, sales proceeds 45 billion expected, and other non-operating items were reviewed. In total, 30 billion yen of operating loss increase was reflected. Question, so sales proceeds of 45 billion to be expected. Well, to the extent that you can share. Well, on an annual basis, negative 80 billion for non-operating loss. What are the major factors behind this? One or two of them. Answer. So negative 80 billion, excluding interest cost. What are the items excluding interest costs? On a cumulative basis for FY2017, structural reform cost negative 50 billion, and equity affiliate loss a plus of 40 billion. Other than that, a forex fluctuation loss and others, negative 70 billion. So if you total them, 80 billion negative. Question, thank you.
Thank you for the explanation. Question. First question is about the raw material cost, the impact from the higher raw material cost. How was the impact in the second quarter, and how do you incorporate this in your full year forecast? Answer. The first half was 17 billion yen negative impact. And on a full year basis, 35 billion yen is forecasted. Originally, the metal, raw materials, and flash altogether was expected at around 30 billion yen on an annual basis, but now we forecast 35 billion yen. We are trying to offset this with our cost reduction measures. The first half is 14 billion yen. On a full year basis, 35 billion yen. Question. My second question is on the information and telecommunication business segment. If you could break down which one's strong, which one's not so strong. Answer. Big improvement in profit was seen in platform hardware business. We have continued our structural reform for a long time. The domestic hard business, we have conducted our structural reform, and we're starting to see some results from that. So it is improving. And the front business, SI solution business, is also solid and strong. The project loss is being well controlled and is contributing positively. So this business is strong. The numbers are on page 23. The front and IT platform products breakdown is listed here, so please take a look. Yes, page 23. This does not show the profitability, but for fiscal year 2016, front business was 7.4%. In the first half, it's 7.8% first half, and IT platform 1.5% is now up to 6.8%. So we have made a turnaround. Question. This may be a bit too early, but about next year. This 30 billion yen, if nothing happens, then 690 billion, and with the current foreign exchange assumption, you may enjoy some benefits. So the operating income may reach 700 billion yen. So if you use that as a starting point for next fiscal year, which business segment can expect profit increase? Which business would you, Nishiyama-san, like to expect? Answer. Yes, the structure is as you just explained. We are starting to enjoy the benefit of our structural reform in each segment. We're starting to see some benefits in cost, and operational cost reduction is progressing better than we anticipated. So gross margin is, in the first half 2016, it was 26.1%, but in the first half 2017, it is 26.8%. So we're seeing an improvement. And SG&A was 20.7%, is now 19.8% this year. So we are well controlling this. So this 8% structure, gross margin 28%, SG&A 20%, 8% with SG&A of 20% is not so down the future. We think this can be achieved in the near future. On a segment basis, IT and OT centered on Lumada. The centerpiece will be the information and telecommunication, and the structural reform is done on the low profitability business. We've been eliminating the low profitable digital solution business, for example, but we will take this further. So the structural reform we've done so far and the loss and cost reduction will continue. And in addition to that, we will expand the Lumada business and expect this business to grow going forward. Until now, products business had been enhanced, strengthened. Railway and the industrial equipment through M&As. For fiscal year 2017, the profit from M&A will be small. There is a one-off initial cost, so the contribution is still small, but we expect the contribution to profit will expand in fiscal year 18 and onwards. Question, just for clarification. So for the upward revision, the information and telecommunications and the social infrastructure and industrial systems has little contribution, but this will be bigger next year? Yes, that's what we expect. Thank you very much.
Any other questions? Please go ahead. Question. I have two questions I would like to ask. Question number one. This overlaps with the earlier question, but on information and telecom, IT platform profitability improved substantially in the first half. Looking at page 23 of the material, in the 24.2 billion in the first half, 16 billion in the second half. It seems that profitability is going to go down in the second half. Is there a special factor behind that, or are you just being conservative? So about the sustainability of profitability in this area, I would like to ask. Answer. We're being cautious somewhat. Yes, certainly. And another factor is that in the first half, high-end flash storage business performed better than expected. Sales were stronger than expected. So in the second half, we're being cautious about that. Question, to the extent you can share, in the first half, high-end flash storage business, well, how much exactly was that? Just to give a rough idea in billions. Answer. We have not reported that, included that in the material. I can't say. So question, and so you're being pretty cautious with respect to high-end flash storage? Answer, yes. Question. Second question has to do with Lumada. It seems that progress rate is gradually going up in the second quarter. Lumada Core, 86 billion. Against the plan, what was your assessment of this number? And in industrial systems, you're trying to leverage Lumada to improve competitiveness. You have given us quite interesting examples. Are they really contributing to this fiscal year's performance? So that's my second question. Answer. So these competitive projects have just begun. So at the moment, we cannot quantify them and discuss them in quantitative terms yet. But these initiatives or projects or inquiries we're receiving from customers are increasing. There's a very strong need on the part of the customer to utilize Lumada. On Lumada core business? Well, answer, although we do not have numbers that we can share, for the first half, 48% progress rate, it's better than planned. And so for Lumada Core as well, pretty much the same.
Question. I have a few questions myself. I will go one by one. In the information and telecommunication, you said that the structural reform is progressing well. But in the social infrastructure and industrial systems, you may have problems. I think you have reserves, but the business has continued. So oil and gas and all those businesses inclusive. Social infrastructure, industrial systems, update on the structural reform. Could you update us? And what is your future plan? What is your forecast? Answer. Including the closure of a few companies, EPC, overseas EPC, large construction deals will end. We will withdraw from those deals, and we are trying to take the steps to withdraw from them. There are some where the construction has been completed and some where the construction is underway. And they are progressing on schedule. There's one project which will continue, two projects rather, that will continue till fiscal year 2018. But other than that, we will wind down the construction. However, there are some pricing or payment that we are negotiating with our customers on the additional specifications. But in terms of cost, we have provisioned the reserve, and so the cost has been taken care of. Question. So you don't anticipate any additional cost? Answer, no. there are some undecided portion that should be negotiated with our customers, but this is already set as risk buffer. So part of the 30 billion, it will be apportioned. Question, I understand. Now the UK railway business and the Solier update, which is going well. Could you update on us on that? Answer, IEP start on day one. We had some troubles. There are 2 points. One is the delay in the railway delay, which caused some inconvenience. The reason of the delay was the wrong system setup, and the water leakage. The water leaked because of the deficiency in the piping. But we have cleared this problem. It's completely solved. We will take solid measures so that these problems will not happen again. Solier. PMI of Solier needs to be promoted so that we can enjoy synergy effect as soon as possible. So first we will focus on PMI. And we have formed various working groups to promote our PMI. We are expecting in the sales side synergy. We had in Las Vegas, there was Solier Agency Conference in Las Vegas. Solier exhibited not only Solier products, but also Hitachi industrial equipment products, and exhibited together as one Hitachi. So they are very energetic in moving this forward. So in fiscal year 18, in fiscal year 17, there will still be one-off costs, but from fiscal year 18 onwards, operating income 50 billion yen, and even after the amortization of intangible assets, we will be able to enjoy 10% profitability. So that is our target for the PMI. Question. My second question is the basis of your plan for the second half. This 9 billion for the corporate eliminations, I don't understand that well, but if you add the first half, the second half, the operating income has not changed much. But LDP 1 for good or for bad. Now, operating income, how is your view on the operating income downside and upside in Japan and abroad? Because you had this upside in the first half, please share with us your view. How much more than 700 billion can you go? How much upside do you expect or not, backed by the business environment? Now, economic situation. We think this strong economy will continue. But we have to watch closely and ascertain whether this will actually be the case. And the raw material. As I said earlier, is rising. Materials price is rising. We are taking measures to deal with that, but whether we can minimize the impact or whether we can offset this with cost reduction is something we have to work on. We still have some concerns. Railway, steel, rare metal, copper, flash. The raw material cost is rising, so we have to absorb this with our cost reduction measures. So this impact has to be ascertained. we have front-loaded the project from second to first quarter. We have deals and information and telecommunications and social infrastructure industrial business where the projects will complete in fourth quarter. So we will minimize the loss as much as possible so that we have the risk buffer of 30 billion, but we hope we can avoid that risk and achieve this close to 700 billion yen and 8% operating profit. Your business has been shifted to Johnson Controls, the Flon, so that's not a problem. Answer: metal and flash are the biggest factors. Question: my last question is, as I always ask you, maybe there's no new news flow, but the South African deal and the nuclear power business starting in fiscal year 2019. If you have any updates, answer. First, South Africa project. Our negotiation with MHI, it has reached the arbitration, and so this will be within the scope of confidentiality, so I would like to refrain from giving you the details. However, in the arbitration, we will assert our own position. On the other hand, we will also try to make efforts, as always, to come to a settlement through negotiation. That's all for South Africa. Question: what is the progress of construction in South Africa? Is it progressing well? Answer: yes. Answer: for Horizon, the latest update is overall it is on schedule. First, ABWR, the GDA, Generic Design Assessment for UK ABWR, is now in the final stage, fourth step, and it will complete within by the end of December as scheduled. And with that, with a new read site license, which we applied in March 2017, which is the installation license, this will be acquired by 2018. For EPC, the FID, final investment decision scheduled for 2019, will be the milestone. So we will start the construction after that, after FID. And the additional subscription for Horizon, which will be the basis for FID, is now being discussed with various investors. That is all we can say at this point. Question: the most important point is the investment by the investors. Compared to previous timings, do you feel the traction, or is the situation changing? What is your image? Answer: we are negotiating with various investors, and some investors are interested, so we continue our negotiation. Thank you.
すいません。あと先ほどのですね、海外プラントの
And about overseas plant projects, we said 2 projects, but actually it's 1. Question: so if you can manage that project, there will be not much of a loss. Answer: yes, that's correct. Any other questions? It seems that there are no further questions. So with that, we would like to conclude this meeting. Thank you once again for your attendance.